Good morning, everybody, and welcome to this Australian market preview for Wednesday, December 16. My name is Carl Capolingua. I'm the market analyst over here at ThinkMarkets, and it is a pleasure to be with you as we stare down the barrel of another risk-on day for markets. Hopefully, that flows through to the Australian market as well. The ThinkMarkets Difference, before we get any further, is important and substantial. $8 flat rate trades, your own holder identification number, and unlimited phone support. Don't forget, no platform or subscription fees either. They are four fantastic reasons to make your next ASX share trade with us. Another 10 fantastic reasons if you're looking to switch your broker. Get on board with us before December 31 and you'll get 10 free trades as well. So head to the website, download the app and get started. The agenda for this morning is to have a look at the key market moves for the last 24 hours. We'll have a look at some of the charts as well, bring it closer to home and see what some of the ASX companies are doing, and then finish off by looking at the calendar. The ASX 200 yesterday, a down day. It was a pretty average old trading day, started lower and then just ebbed lower into the close. But the falls were fairly limited, 0.43% for the broader market, but there were some sharper falls if you were in energy, 2%, gold, 1.7%, materials, 1.7%. And whilst Infotech says only 0.15%, some of those tech stocks were actually hit pretty hard. So it looked quite risk off yesterday. You know, the growth sectors of energy, material, technology were all hit. On the bright side, healthcare managed a little bit of a bounce back, discretionary. So mainly local retailers were a bit stronger, and property trusts up a little as well, but not a lot of joy elsewhere. In Asia, that nervousness about the developing picture in the US in terms of COVID cases and delays with respect to fiscal stimulus was reflected in some falls. Also, we saw a 0.7% decline in the Hang Seng, but milder falls by the close for the Shanghai Composite and the Nikkei. Wasn't anything to worry about, however, because US markets complete about face from their Monday night performance, and very, very strong close on all three of those major indices. The Dow Jones up 1.1% by the end of it, and the S&P 500 and NASDAQ closer to 1.3%. And it was good to see the volatility index sharply lower as well. In Europe, the DAX enjoyed a bit of a rally there, 1%. French market pretty flat, and the FTSE down just a touch, bucking the trend. In commodities markets, we're looking at the London Metals Exchange. That's the LME up the top. Better performance for lead, nickel, and then pretty dour, I'd say, for aluminium, steel, tin, and zinc in comparison. Good to see copper getting a 0.65% gain in New York to match its 0.5% gain in London. Iron ore prices up strongly this morning as we move to the May benchmark contract on the Dalian Exchange, up 2.25%. It was up about 1% in the US dollar price. Gold and silver, somewhat of a little bit of a resurgence there. Gold up 1.4% and silver up 2.5% as the US dollar weakened. That was on the back of renewed hopes that the key personnel are getting together to hopefully, including President Biden actually involved in these talks, to get a fiscal stimulus package over the line. And that should include further unemployment benefit relief, relief for student loans, relief for state budgets as well. So a few ways to help the US economy in this package, hopefully. That saw the US dollar index fall by 0.26%, which has helped the Australian dollar over 75.5 US cents, up 0.3%. And bond yields rose as well. So the longer term bonds, they're up a couple of basis points on average. Energy prices generally higher, up 1.26% for West Texas. Okay, yesterday in this exact update, I was looking at this Monday candle here, and then that's the Tuesday candle. And I was pretty concerned about Monday's price action. So we'd had some good price action through Thursday, Friday, and basically completely undone by Monday's bearish high open, then low close. And as a bull, you want to see it go the other way. I'm not a bull or a bear, I just follow the trends. But if you are a bull, you want to see a low open, even if it probes some areas of demand, of support, and then you want to see it power through the day and close on the highs. And that's the opposite of what we saw on Monday. But it's pretty much what we saw in Tuesday's trading. So reversing that bearishness. And you say, well, which one do we look at? Which one's more important? Which one do I believe? Well, let's go on weight of evidence. Certainly, as we saw Thursday, Friday, were an improvement. They were showing that there does appear to be some latent demand around that 3,600 level. Monday, you get a real scare through the market, or at least the technical analysis side of the market. And then Wednesday, we revert back to the prevailing trend, which is fantastic. And what that does is, if you've got some of those bears that like to go on any signal at all that the bull market is about to end, and they put their money in on the short side, they're in real big trouble right now. So they are feeling the pressure. They may have to scramble to cover back their shorts today as the longer term trend, which is what the bigger money is following, starts to prevail once more. So I think it traps bears in the market, and that really then can contribute to demand, because when those bears have to cover their shorts, they need to buy, and that buy becomes part of the demand that is already in the system. How do I know there's demand in the system? Look at the trend. You can only get a trend like that when there's plenty of demand in the system. And we can see this short-term dynamic zone is certainly supporting prices along with some of these static zones, and we should still get a bounce off here. So 37.13, to cut a very long story short, becomes the key point of supply now. That's where some people got stuck in the market. They were, as bullish as you can be, because we were at all-time highs. They got stuck in the market, and they're thinking, look, if it gets back there, maybe I'll take my break even. Not everybody's going to do that, so probably only temporary supply point, and then we can move through to new highs later in the week. Okay, I can talk very little about the NASDAQ now because, copy and paste from the S&P 500. What I will say about the NASDAQ is the price action continues to look better on all fronts. So that one is very prospective, and I would expect we'd break through that 12,608 if we haven't already, maybe with last night's close. It's a pretty close one, but I think we're headed there anyway. So we will maintain our bullish stance on US markets. How does that affect us back home? Well, the S&P ASX 200 futures, the share price index, trades overnight in response to US moves, and it had a pretty good session, closing at 66.82 versus the 66.88 high. So we want to see the overall shape of the session, and I'll get the pen going here, and that is bottom left, top right, and that is supportive of strong demand in the system. It is supportive of that demand continuing through today, and we want to see where it closes in relation to the high and the low, and it almost effectively closing there at the high. So that's also very good. The futures are pointing to about a 1% gain on the open, and I think after maybe a little bit of a pullback on the open, some very short-term profit taking, we may see that uptrend re-establish itself. And we'd certainly like to see the uptrend re-establish itself on this chart here. That 66.32 little demand point, yes, the point of demand there, a little trough that was formed, got taken out yesterday, and that's a little concerning. So we need a good performance today just to confirm that there's a new trough potentially developing here, and we can go target 67.46 and then into 68.97 and then 71.97 potentially sometime in the new year. So again, with these dynamic zones not far away, with the long-term trend now up and established, I'm happy to maintain our long side bias on the S&P ASX 200. And you might say, well, I'm a bit nervous, when will I know the market's going to turn? Look, we'll be looking at the charts every day, and I will tell you when the market's about to turn. The dividends for today, there's a few ETFs paying today. Press pause as I flick through to the next page and the next to see if your stock's on there. In terms of broker moves in the last 24 hours, just a few there. RBC Capital Markets have lowered their Mesoblast target from $12 to $11. Credit Suisse has made some tweaks to its gold price expectations for calendar year 2021. They're expecting the price should regain its upward momentum, a recovery, I guess, potentially based upon this weaker US dollar is probably one reason, bit of the reflation trade as well, and they could see it hitting 2100 sometime in 21. And as a result, they've tweaked some of their price targets. Now, having said that, most of those price targets went down, and that's on the back of the recent weakness in gold and its impact potentially on earnings. And overall, we've got a small tweak down net. So they've lowered their price target on Newcrest from 37.70 to 34.65, but retained their outperform rating, as they did for Regis Resources and St Barbara down below, but the price target for Regis going from 645 to 525, and for St Barbara from 440 to 330. Apart from that, Citigroup also lowered their price target for St Barbara, coincidentally, from 360 to 270. The calendar for today is a pretty busy one, both here and abroad. We'll get our flash manufacturing and services PMIs today. They're the big ones. And then looking to tonight, a huge data dump coming up. We are going to get some similar PMIs, so services and manufacturing PMIs in Europe. They'll also be coming up in the US, along with retail sales. We'll also get the National Association of Home Builders Housing Market Index. And then the big one, the Federal Reserve meets to discuss interest rates. Okay, you can catch all of our other updates in our market news section. I will be travelling a little bit later on today to Sydney, to Ausbiz Studios, to do the call in the studio, and then we'll do the Strawman Classic. So there might be fewer updates than you'd normally expect over the next 24, 48 hours as I'm in transit. But otherwise, they will be there back to sort of normal service towards the end of the week. You can follow me on Twitter if you like, or the Think Markets handle is there. Also, upcoming events, weekly Think Tank on Monday as usual, and then we'll do the Think Learnings commencing back in calendar year 21. The disclaimer before I leave you says that everything in this presentation is general in nature. We are a regulated Australian broker, and we do have some products that could see you lose more than you deposit. So please read this carefully, understand it. If you're not sure about any of these items, give us a call or consult the website for further details. It has been a pleasure being with you this morning. All the best for your trading until we catch up again. Bye-bye for now.